Investors and traders, welcome to the channel Market Chart Pattern. Today is 24th of September 2023 and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the US dollar index and key forex pairs, namely the euro dollar, euro USD, cable, GBPUSD, and the dollar yen. And if time permitting, I might actually take a look at precious metals, gold as well, but we'll see how the video will go. So this video is for educational purposes only and it is not a financial advice. This will be a series of videos. So first video which will come out for the forex market. It's really important to take a look at the US dollar. Then I will do a separate video just covering the treasury markets. Maybe we'll mainly take a look at the US treasury futures, and then the third one will be about the US stock indices, the major ones that we follow. Because the videos get too long, so I thought I'll just divide them and then publish them. Okay, so moving to the US dollar index, here what we are looking at is the daily chart. Now the dollar index is at a very important level where it is trading at, and I'm going to just blow up and show what I mean by that. But what I also wanted to show was that after peaking here on the 30th of September 2022, so about a year ago, the market has actually made a 61.8% Fibonacci retracement of the lows back in 25th of May 2021. And we can also actually go back to the beginning of the year of January 2021 as well, because the lows were pretty much a double bottom. So we have made an exact 61.8% Fibonacci retracement of that, and then the market has actually been rallying for quite a while now, so a couple of months, a little bit more than that. Now it is at a 38.2% Fibonacci retracement. So I'm going to blow up the chart, we'll take a look at that. But before we do that, a number of things. While the market was coming down and making this bottom at 61.8% Fibonacci retracement, it also did it in a one-to-one price projection ABCD formation as well. So that's why we had a confluence of two things coming together. And whenever we have that confluence of two or more, it is something we really like to pay attention to. And these are usually stronger points or even market pivots when we have two or more confluence level coming in from a pattern recognition or Fibonacci ratio perspectives. Okay, so I'm going to blow this up, this chart here. So what we can see is that this market is right into a zone which is right at the 38.2% Fibonacci retracement. In fact, the market is trading a little bit higher than the exact 38.2% Fibonacci retracement drawn from these highs of the 20th of September 2022. And but it's just really finding quite a lot of resistance. Sometimes it moves lower, it goes and touches the 20-day moving average, then it moves higher, but it's in this zone. And it's also from a structural perspective, right on the left hand side, we have a previous high here on the 8th of March 2023. Also from a symmetry perspective, it's gone above that a little bit. So we do have a number of things coming here, but what is really important is that if this market is to move lower, then this point is a key pivotal point where the dollar index should come into resistance and the market could in fact pull back. From a momentum perspective as well, on a daily chart, 20-day moving average is above the 200-day moving average. So that will be a key point. If it does in fact pull back, watch the 200-day moving average. But if it begins to move aggressively higher from here, then the US dollar is likely to get much stronger. So we'll just take a look at that on the weekly chart. So here we go. This is the weekly chart. What we had found previously was that when the market was approaching the 38.2% Fibonacci retracement back in March of 2023, it found a good resistance from the 38.2% Fibonacci retracement, moved lower, then tried to rally back from the 78.6% Fibonacci retracement, moved lower, went right to the 61.8% Fibonacci retracement in a ABCD 1-to-1 price projection fashion, and we have seen a strong bottom so far, and it is right trading at the 38.2% Fibonacci retracement again. And what we have to wait and see is whether the dollar remains strong here or whether it is likely to find a resistance from this level. So it's trading really at the critical level, and it's been doing that for the past 3 weeks, but it still remains strong, especially from the momentum perspective. Now let's move to a really longer term chart. We are taking a look at the monthly chart. Now what we show on the monthly chart in these red lines is basically going back all the way to the early 90s, 1990s. So that's quite a while ago, 3 decades. And what we see is that we have this what we like to call market symmetry here. So it took about approximately 10 years for this market to rally from September 1992 to form a top around 2nd of July 2001, and then we had this recovery top come in a year later in Jan, not a year later, a few months later, yeah, half a month later, half a year later, excuse me, in January of 2002, and then the market aggressively sold lower for several years, and then it began to recover, and a new bull market started in earnest, in my opinion, in 2011, and we have been in this bull market ever since. But now, from a pattern perspective, what we are really watching is that symmetry 10 years, and this rally took place for about 12 years. So this is market symmetry. We need to pay attention to this. And then this level was around the 114, 115 level in the dollar index. We have this nice one-to-one price projection ABCD take us right there. So again, something really important to pay attention to, and that's where it found a good amount of resistance, and then market actually fell lower for several months and found this bottom here from the 61.8% Fibonacci retracement from this level C to the top D. And right now it's at 38.2% Fibonacci retracement. This is what I was saying on the daily chart and also the weekly chart, that this is the pivotal moment. If the market convincingly breaks above this, and we are approaching the end of the month for September, which is also a quarter end, then this market could actually be pretty strong. And here I want to bring your attention to here what happened in the early 2000s right here. So we had a top formation, and then we had a recovery top. In fact, if we move a little bit below to before to the early 2000s, so October of 2000, what we see is there was like a top in place and a sharp pullback, and then the next rally in fact took this top out, and then there was another attempt to the top, and these are monthly charts, so this took place over the course of several months and completed in a few years time. A sharp rally back, and this is the rally where the market is not able to take the price out, and that's when the bear market or the bear move started. So could we be seeing something similar? It is possible, and for that reason we really need to pay attention to this 38.2% Fibonacci retracement, so roughly around 104 105 level. So in my opinion, what could happen is similar to what we had seen in the early 2000s. If the market convincingly breaks above this 105 level, there is a chance maybe it is able to take this high out as well and go right to the 78.6% Fibonacci retracement, which is around 116.65 roughly speaking. That's also a possibility. So the early indication of that is right here, 38.2% Fibonacci retracement. An alternative scenario is that, let's say, if this market does break above convincingly, we'll move to shorter time frame for that, for example the weekly chart, when that in fact does place, if it does take place. then what we are looking at is there's a possibility that it could just be a recovery high. The market could retrace anywhere between 61.8% to 78.6% Fibonacci retracement. If it does that in a one-to-one ABCD price projection on a shorter time frame, such as daily, that's gonna be a really good pattern to watch. So that scenario like this one also remains on the card. So we have two scenarios. The aggressiveness of the move, especially on the shorter time frame, will tell us, will give us indications whether it's gonna be a move where this high is taken out and it goes right to the 78.6% Fibonacci retracement around 116.65, or there might be a possibility that could be just a recovery high, and that's where the market finds a lot of resistance. We'll have to wait and watch, but as the first point, we have to watch 105 level really, really carefully. So that's what we are watching in the dollar index. Now let's take a look at the Euro USD. So the Euro USD is pretty much a mirror image of the dollar index, because the dollar index, there's about 52 or 53% percentage points are in Euro USD. So here again on the daily chart, what we can see is it had a nice one-to-one price projection ABCD right into the 1.272 Fibonacci expansion of the BC swing, found a great amount of resistance here, and the market has been moving lower for quite a few months. Now it is approaching certain key levels on a longer time frame, which I'll show you. But one thing more I want to point out is that from a momentum perspective, we see the 20-day moving average below the 200-day moving average, and that's negative momentum. But again, the market is reaching certain really key support levels, so that's what we're going to focus on right now by taking a look at this weekly chart. So here we go. So what we can see is on this weekly chart of the Euro USD, that this market found resistance right at the 61.8% Fibonacci retracement of the high right here of 4th of Jan 2021, and dollar index had actually found a support at the 61.8% Fibonacci retracement. So again, the 61.8% Fibonacci retracement or the 38.2%, these are really key ratios to watch. And now what we are seeing is that after the market has rotated lower, it is approaching this level where it is pretty much right here. But I'm gonna give it a little bit of a wiggle room as well, because we had this big wick, so it depends where we draw the ratio from. So we are right about the 106.24 level. So anywhere between 106.25 to these days market moves a lot, so we'll give it 50 pips, for example. We'll need to watch these levels really, really carefully. So 105.28, 105.30 level, this low here is really key. So it's possible that this market might just consolidate around here, might even begin to rally from here, just because of this level that we are approaching, or might already be here, which is 38.2% Fibonacci retracement. Let's take a look at this on a longer term monthly chart as well. So here again, something that what we can see is this market formed a bottom here, rallied right to the 61.8% Fibonacci retracement, and now it's really at key levels, as we have seen on the daily chart. So let me actually make it. There we go, 38.2% Fibonacci retracement. So this is what we are watching in the Euro USD. Let's move to the GBPUSD. So that's the cable. So the cable, the picture is a little bit different. In fact, what we see in a cable is actually a lot more weakness. Let me move to the weekly chart where things are a little bit more clear. So here, what we see is something, we really like to cover at market chart pattern, which is the concept of market symmetry. So this red line basically indicates the move that we had in the March of 2020. So these are the COVID lows, right, a rally to the February of 2021. And if we just take that and project it from the bottom here, these are the exact symmetric moves. So the markets like to repeat over and over again. And the other interesting part is that this top right here, it came right between the 61.8% Fibonacci retracement and 78.6%. But it missed the 78.6% Fibonacci retracement quite a while, quite a bit actually. But again, we have this symmetry which was alerting that we need to begin to pay attention, and possibly there could be a reversal in play, especially as it reached and breached a little bit of the 61.8% Fibonacci retracement. And this move had actually, in the initial move, it retraced right to the 38.2% Fibonacci retracement, and that's where the strong trending markets come in usually. That if the market is not able to retrace lower, then it just like rather aggressively moves higher. And it's what we have seen, but then the market symmetry is just too strong for this market. So this is what we are looking at in the GBPUSD cable. Now the most interesting one is actually the dollar yen. Now dollar yen is a very key currency pair to watch for a number of things. The amount of influence, or I shouldn't say influence, but the correlation it has with the gold market, for example. It's quite remarkable. But we are not going to go into the intermarket relationships for this video. I just want to show you, this is the daily chart of the dollar yen. And if you see some of the old videos which are done on forex, we had actually called this bottom because of the ABCD pattern formation right to this level, which was the 50%. And here on the top as well, we had identified that we should be watching this zone between 38.2% Fibonacci retracement 50%, because in this leg lower, every time there was a rally between 38.2% Fibonacci retracement 50%, the market had found resistance. So in fact, the market did find resistance, but then it also just retraced right to the 78.6% Fibonacci retracement. That's where the decline stopped. And then what we have seen is a nice trend, which is where the market has been moving in a channel formation, rather slowly. Then it began to have strong burst to the upside, and this is the channel top formation where it found resistance. And the interesting thing is again the concept of market symmetry, that this is the down move it had, and it had a similar pullback, and in fact then a double bottom here. And where it is right at the moment is really key. It is right at the 78.6% Fibonacci retracement, in fact a little bit higher, trading higher. From a momentum perspective, it is also momentum is pretty positive, and it's possible that this positive momentum could actually carry it up a little bit higher to maybe around 150 to 150 spot 50 level, right at the top of this channel. It's also a possibility, but again, we need to be watching this market very carefully, and we need to be very carefully looking at and watching this rally which is taking place. And the reason is that I want to show you on the weekly chart what is happening here. So what we have is actually a top formation right here, and then on the daily chart I had shown you how it retraced about 50% of that move, and also did an ABCD pattern formation. And then what it is doing is it could be regarded as a recovery high. Whether it's able to take this high out or not, it remains to be seen. But what we can see is that for the past 3 to 4 weeks, the market has positive momentum, is moving higher. But again, it's just above the 78.6% Fibonacci retracement. We also have 1.272 price, the expansion of this move lower. We do have 1.618 expansion right above that. So it's kind of getting into that zone. Let me actually draw that here. So that one is around 150. So yeah, I mean, this is where we need to be careful of this advance in price. So let's move to the really long term um, monthly chart. And this one is rather a very interesting chart. It's a really long term chart as well. And here a few things that I wanted to point out, and why I believe that this high which the market reached in October last year 2022 is a very important high to the one that we really need to pay close attention to, is because right at the 38.2% Fibonacci retracement from the highs the market reached back in October of 1982. So that's like a really long-term horizon price action point that we are looking at. So we need to be careful, not just only because of that, but again, if we just look at, in the past, the market had, this market in particular had really sharp moves, and when it had moves of this much magnitude, sharp pullback, this much again, sharp pullback. And if I just point it from here, where we had this 38.2% Fibonacci retracement come in, right pretty much around the same level or the same symmetry it is showing again. So that's why, in my opinion, this level of 100, and let me try to get the exact high, 152 is really important because of the 152.70, because of the 38.2% Fibonacci retracement, and a confluence of few other things. There's one-to-one price projection coming in, so that's the ABCD pattern formation. So we're reaching at the 38.2% Fibonacci retracement with the ABCD price projection, and also the symmetry is here. So that's why we have a number of things, or confluence of things coming together. That's why this 152.70 level is really, really important. And what could be also possible is that, just like we had a recovery high here, and then after that the market just broke down, we could see some, I don't know whether it'll be something of similar magnitude, but we could perhaps see a sharp pullback where the Japanese yen begins to strengthen. So it all depends upon how the market is going to react to this 38.2% Fibonacci retracement, whether this high is a recovery high, or whether in fact it convincingly takes this 38.2% Fibonacci retracement out to the upside, which would indicate that this pattern formation that we are looking at, this market symmetry, is actually invalid, and it would mean that the US dollar could actually strengthen a lot and the Japanese yen would weaken. So, and if the US dollar is going to strengthen a lot, this means that other currencies will be impacted. Some of the commodities, usually there's an inverse relationship between the US dollar and the commodities, that could have an impact. But again, if there is too strong a demand for the commodities, maybe it's also possible that there is not that much of an impact, and both of them could actually rally in tandem. And then there could be some impact on the equity markets as well, because the strong dollar. But again, we have to wait and watch and see how this pattern is going to behave. So for the dollar yen, really important levels where the market is uh, trading right now and approaching these key levels, 38.2% Fibonacci retracement, and what the market is likely to do, we have to wait and watch and see. And then based on the pattern recognition, we'll be able to assess what the market might be likely to do. Apologies again, a really long video. I will not have the chance to look at the gold market. So I will end the video right here, and new videos will be posted soon. Thank you very much. Good luck and good trading.